Alright, guys, so let's talk about oil and let's talk about the US today. Now, let's recall what happened during Trump's speech in Davos. During that event, he basically told the world that the US, they want oil prices to come down, but it won't be America drilling just yet.
And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which frankly, I'm surprised they didn't do before the election. That didn't show a lot of love. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that war will continue. You got to bring down the oil price. You got to end that war.
Trump wants Saudi Arabia and OPEC to pump more oil, to flood the market with more crude supply to bring prices down. Now, his reason was to end the Russia-Ukraine war. However, that isn't the real agenda here. Rubio is already in Saudi Arabia talking peace with Russia. So why does Trump really want oil prices to come down? Now, the answer is very simple. He needs inflation to drop in order for rates to also fall. Now, the Federal Reserve has signaled that rate cuts will not come until inflation goes down in a big way. Powell has warned that inflation still has a lot of work left. Now, the world knows how inflationary Trump's trade war is. When you decide to impose a tariff, it forces the prices of goods throughout the United States higher. It doesn't punish China or Canada, but the US consumer directly. It raises the cost of living, and investors holding bonds, they are demanding a higher return as compensation. Now, since Q3 of last year, US 10-year yields have been rising higher and higher, hitting nearly 5% at one point. This is horrible news for Trump's economy, especially when he wants to re-industrialize the country. Now, every activity in the US is built on debt, whether it's steel company hiring more workers or oil producers drilling for more crude. They have to borrow money to fund the activities. Now, Trump has to find a way to lower inflation so that the long-term borrowing cost starts to come down. But it's a chicken and the egg problem, and that's why he's asking OPEC to do him a favor and bring energy prices down to lower the CPI. Now, Ford, for example, is moving to build a US battery factory in Michigan using Chinese technology from CATL. Now, it's quite ironic, but focus on the price tag here. This will be a $3.5 billion plant. If we assume the amount comes from debt, a 1% drop in interest rates alone is extremely significant. It equates to hundreds of millions of savings over time. To re-industrialize the country, interest rates have to fall down dramatically. However, there's a big problem. Just because Trump wants lower oil prices doesn't mean he will get his way. The main drivers of the oil price is still OPEC, and they aren't complying. We have reports that OPEC Plus might be considering delaying their supply increase that's coming in April. Now, the current plan is for OPEC to unwind their 2.2 million barrels per day worth of cuts, and April would see an increase of over 130,000 barrels. And if that happens, increased supply would push down oil prices, and that would be great news for Trump and help ease inflation. However, is that even feasible? The OPEC cartel responds to supply and demand trends in the global market. They are not a US agency, and they don't take orders from Donald Trump. According to the EIA, the outlook for oil demand isn't looking good going forward into 2025 and 2026. And if you're an oil producer, this means only one thing. You will start to drop production, or at least you don't want to increase it. From 2025 to 2026, production around the world will outstrip consumption, and the gap between them will only continue to grow. Because of that, producers in the world will have a big supply buildup. Now, this is a forecast, but if it comes true, it's crazy for OPEC to increase production just for Trump. In fact, if future demand is going to stagnate, the smarter move is to actually stop the supply hike, to curtail production to jack prices higher. And here's how serious the fall in crude price could get over the next few years. Now, oil prices are expected to fall from $81 a barrel in 2024 to just $74 this year. And in 2026, the price of oil could drop again by over 10% to $66. Now, knowing this, it's very unlikely for OPEC to bow to Trump's request and cut now, chief of which is Saudi Arabia. MBS is trying to move his country away from total oil dependency and build up other sectors of his economy. And that means investing in green energy, tourism, AI, and technology. And all this requires a ton of money, and the kingdom is borrowing a lot of money to make it happen. The Saudi deficit will hit over 100 billion riyals or 27 billion US dollars. That's equivalent to 2.3% of the country's GDP. And in the years ahead, the deficit could widen, especially after MBS he pledged to invest hundreds of billions in US companies. So the Saudis are caught. They can't afford to make a wrong move and preemptively flood the world with supply. That would collapse oil prices and leave MBS with a financial black hole. And it's not just Saudi Arabia that has a budget squeeze. Almost every OPEC Plus producer requires a high break-even price to meet their spending needs. For MBS, it's $98. For Iran, it's over $120. Bahrain comes in at an astounding $135 a barrel. Trying to bend over for Washington means destroying their own economic budget. Now, for OPEC, they will do whatever it takes to ensure they maximize their revenue. And if demand starts to fall, they could even cut production should things get bad enough. There's also another big wild card to consider. Russia and the US are in Saudi Arabia negotiating peace terms, and the key topic was the removal of sanctions on Russia. Lavrov and Rubio, they are discussing the possibility of dropping barriers set up by the Biden administration. And that means, of course, rolling back the commodity and energy sanctions imposed on Russian oil. We must understand how big of an oil producer Russia is. Russian exports accounts for over 3 million barrels a day in the global oil market, and that's around half of Saudi Arabia's own exports to the world. Currently, the majority of Russian oil is being sold to Asia. China and India, they are of course the biggest buyers of cheap Russian crude. But if the United States decides to roll back the sanctions, like the price cap and those on the shadow fleet, we could see a global shifting of demand. Fewer cargoes will flow to China and India to other parts of the world. Why? Because Russia most probably want to earn more money. So OPEC producers have to factor this into their calculations as well. The price of crude might very well fall if sanctions on Russia get lifted. And there's no need to listen to Trump and pump more today. However, let's take an alternate scenario. Even if OPEC decides to follow orders and raise production, will it really help US drillers? Well, not really. In 2021 alone, there were over 9,000 approved permits to drill for oil in the United States, and these were all unused. It wasn't really Biden that constrained big oil from drilling, it was big oil themselves that decided not to hunt for new oil wells. The amounts of permits have increased, but the wells drilled have decreased, and it all has to do with economics. Now, drilling for oil is just like any other business. You have to crunch the numbers and make sure the project yields a profit. If you're producing oil at a loss, it's simply crazy to even start. And that is the dilemma of oil production in the US today. It's critical to remember the number 70. That is the break-even price for US oil producers to drill for oil and still remain profitable. Now, some wells allows US companies to survive at 59, but those regions are getting harder and harder to find. Unlike the Saudis who have an enormous reserve of conventional oil, the keyword here is conventional oil, the US is drilling for shale. This is a very expensive form of oil that costs a ton to extract from the ground. The US is caught in a very weird position in the oil markets. It's basically the Goldilocks crisis. The price of oil can't be too high or inflation will take down the US consumer. But if oil prices collapses below 60, drilling for new oil will stop. Many existing projects could halt or even shut down. Hopefully Trump knows this because the oil squeeze in the US is going to get worse and worse. This is the current trend of US crude oil production. Conventional production in blue has been trending down since the 1990s. While the shale revolution started in 2010, the US is pumping out more shale oil, which is very expensive to produce. And this divergence is getting progressively worse. So fighting an oil war with OPEC isn't a smart idea. In addition, the US actually needs higher prices in the years to come for big oil to stay alive and pumping. Now the solution is quite simple. Sure, Trump can beat his chest like King Kong and ask for higher crude production, but there's a very big catch.
The inflation crisis was caused by massive overspending and escalating energy prices, and That is why today I will also declare a national energy emergency. We will drill, baby, drill.
So for Trump, higher oil prices are actually more beneficial. It allows the US to drill more and export more to the world. And that also helps the dollar regain lost ground because US crude is always priced in the reserve currency. But for that to happen, the US will have to embrace renewable power that's actually cheaper than burning oil. Now that's the problem with Biden and Trump. None of them understands you need both fossil fuels and renewables. And this is the US energy mix in 2023. Less than 10% is renewable, while petroleum comprises of 38%. Here's the crisis Trump really needs to understand and really get proper advice. The cost of US domestic oil production is going up, while the cost of solar around the world is dropping thanks to tech innovation. The smarter thing to do is to lessen your reliance on oil for power generation. That way, you can start playing with your own demand and supply to swing oil prices around the world. The US is the biggest oil producer in 2023 by far. Production is nearly triple that of Canada, it's more than Russia and even Saudi Arabia. And that looks impressive, right? But there's a problem with this picture. Most of America's production is used domestically, and not much is exported compared to OPEC. The Middle East and Russia have more export power. And that's why the US can't really swing oil prices in the world despite their enormous production capacity. It's why Trump is asking OPEC and the Saudis for help in the first place. He needs the largest exporters in the world to push prices down. And I hope this helps to demystify why the US can't do it themselves right now. The US actually has a hand of really good cards, they just don't know how to play them properly. They keep discarding their aces to pick up trees. However, to get back on track, Trump will have to make peace with China. He will have to do the unthinkable and cancel Biden's senseless tariffs on Chinese exports. Chief of which is the tariffs on cheap Chinese solar panels. The US has enormous stretches of land and deserts with uninterrupted solar potential. Putting a 50% tariff, which is now 60% actually, on cheap Chinese solar cells is just silly. If Trump really wants the US to be an oil export power, he'll need to reduce reliance on his own domestic production. But it will be a hard sell to his voter base. It will mean flipping a ton of campaign promises that won't be easy. It's quite tragic because the US as a country has a ton of resources. They just can't seem to use it properly. Now, the biggest obstacle to the US isn't Russia, China, or BRICS. It's the United States itself. But let me know what you think. Can Trump force OPEC to lower oil prices? Will he finally embrace renewables one day? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.